Hey, good evening, everybody. It's Eric from the Gold Investment Letter. I'm going to give an update on a few things tonight, screen sharing some charts. I'm going to try to keep it as brief as possible, but all important stuff that's been happening and going on. So I came out publicly in the free e-letter with one of our third trades. And I just wanted to explain in a little more detail why this is going totally as planned, even though Lithium Americas Corp today in the US was and Canada. I'm using the US symbol and the US call options, which is how I've been taking a long position here. So the the time when I actually came out and recommended LAC was a few days ago. And at that time, I had come out and mentioned that you want to identify total position. So if you were thinking about risking 100 grand, say for example, or 10 grand or whatever it is, let's just use 100. If you want to take $100,000 position that you can work with, that you have as dry powder, you're going to take 33,333, approximately a third, and buy your first tranche. You can use less money if you have the actual call options, which is where I'll show you. I'm actually going to show you my account with where I've got the bulk of the LAC 10 calls for May 17th, 2024. As you'll see right here, my total loss is 29.66%. So this was my first tranche. My cost is a buck 21. And when I recommended this call to you guys, it was at $1. So anybody who jumped on that probably had a lesser cost average on the calls, like a buck 05, a buck 10, something like that. But in any event, I'm fine with the fact that I've got a higher cost average. And now we're down at 85. I had, some elite members. So I'm just showing you these things. Today's decline was sufficient, was pretty big. And, I've got 125 options. So I put in 15K and I'm willing to risk a total of 45 on this call in this account. And so let's go back to Lithium Americas. And so what's going to happen is I'm hoping tomorrow that it opens lower. The more condensed the decline, and also what we're seeing with the relative strength index 14 is today actually is a higher low in the RSI at 21.18 versus where it was the other day when I recommended an initial position. Okay. So you can do this in the stock itself. I wouldn't buy it the second tranche yet. My hope is that it actually falls down and opens up in the mid sevens tomorrow. If that's the case, it's going to trigger a second tranche purchase and will become even more stretched for that eventual bounce, which in this case, that's a huge gap at around 15 something, here that is eventually likely going to be filled, but that's not what I'm waiting for to take profits on this. The the cool thing about the emotional psychological side of doing the third is you're hearing my verbiage is that I'm hoping my long that I'm already down 30% on goes lower tomorrow because I know that I will have more of the option. I'll bring my average down and I will be able to book bigger profits on the eventual bounce if I'm correct about all this. The third tranche is for extremely extreme conditions. So, that would mean that the RSI usually probably is going to go down to almost 10 or below. We've seen that. I don't think that's going to happen here. I think we've probably bottomed on that. So if we see a flush tomorrow, that could be an interim low. Hopefully at that point, I'm going to send out a separate email tomorrow and mention, just like I said that I would, when I pull the trigger on a second tranche of the options. And if you're doing this and playing along with the stock, that's just fine. I don't remember the exact price it was the other day when I recommended the option here. It's in the email, and so we can play along whenever that second tranche is done. But for me, the juice is usually in the call option. So if we open down that much tomorrow, I'll probably be down about 45-50% on here and hopefully be able to buy these calls at 60, 70, 75 cents. That would bring my average down because I'm buying, another 15 grand worth, and we'll see what that all looks like. And I would be very, very comfortable with that. So that's to just keep you attuned and abreast to this is how these trades work. And I wasn't fabricating when I say, you know, over the years in eliteinvestments.com, Gold Investment Letter, and Black Gold Letter, the three newsletters that I do still write, Gold Investment Letter being the baby, my baby, and the biggest one. But some of the trades have been done publicly before, and we've nailed all of those profitably. And many of them were done with elite and or premium members for these type of situations, which don't always they have to present themselves. You need extreme conditions like this on a decline, or sometimes we've done it, I believe, with shorts or ETFs on the levered side for a put. But I like to do it in oversold conditions and basically scale into a long swing trade that I will then flip. And you can be sometimes, usually what happens is that, if we get a second tranche in or first tranche, whatever, and I'm already feeling it in my gut to go long, we'll get a bounce. We'll get a nice bounce. And it's actually better to have two of the tranches in place and a lower cost average, because it could just bounce back to where we bought the first piece. And, on the call options, you're probably going to bank 40, 50, 60% gains on that small bump. And many times I'm more conservative on the exit, where I sell it too soon just to lock in the profit and then not worry about getting greedy. And that's why we've had 22 out of 23 of these trades over the last 7 years or so have been profitable ones. And pretty quickly. I don't know that there are many that we've held more than 6 weeks because of the extreme conditions. It's bound to have something occur. There was just one trade I believe we lost 2 to 3% on. And that was just because I sold out early. I was worried about that particular market and the way that was trading. And I decided to instead of my ego and saying I'm perfect on the trades, 23 of 23 or whatever, I just said, and I think that was like 3 trades ago, maybe, where we had that small loss. But other than that, this is a very profitable system. So hopefully some of you are following along, or if this is the first you're hearing about this or seeing this, or you saw the other email and didn't take action, you're in a better position than those of us that took that third tranche yesterday. So if I come out with an email tomorrow and say I took the second tranche long, meaning, I'm mentally saying I've got, in my case, I have $45,000, $50,000 to allocated to potentially put into this trade, the worse that the conditions get, if they all line up. I put the first third of it to work 2-3 days ago. Now it's going lower. I haven't pulled the trigger on the second third of that amount. So 15 grand is ready. And tomorrow, if we open lower and go, hopefully extremely lower, it'll make it easier to make the decision to pull the trigger on the second tranche. Now, from there, there's an even better chance that we're going to get a pretty meaningful bounce, even if it's just a technical bounce, and this is still going to roll over and go lower in the lithium space, which I don't know that it is. This is very extreme for Lithium Americas. That bounce could come by the end of the day or the day after or early next week, and I flip it and we're out and we make a nice little bit of money that you can, then use. If you're an institution or a hedge fund or a family office and you were playing along with this with the equity and doing it in size, because this thing trades millions of shares a day, 8 figures a day in volume. It's a pretty big market cap company. You can play this way as well. What I would suggest, because most of you are probably like, this dude's just taking a stab at the air with his trading process. I'm not. This is a very profitable formula, and there are certain things that I see that I don't actually share when these conditions do create themselves. But if you see me stick the trade, you may want to think about coming into the premium where you're going to get these a bit more often. But frankly, if you have 1 or 2 of these type of trades a year on the swing trade, I mean, it pays, one of them can pay for, a decade of your subscription cost. Anyway, let's move on. Gold looks fantastic, I think, in US dollars. What I do believe is that so gold is probably going to make some sort of an inverse head and shoulders here, and maybe some sideways action is appropriate. We still have further to go. It could just continue to go from here, and scale higher. The 2200 level is the big daddy. Once we go through that and that triple top high that we've tested 3 times, that's when gold goes virtually immediately overnight. And I mean by overnight, I'm talking about like 2 weeks to 2 months, 3 months at the maximum when it goes through this level. I'm sorry, this is 2100, not 2200. When we go through that, which is not far off, you're going 27, 2800 in a very short period of time because it's a massive breakout. But until it does that, that's still resistance. But look at the miners, GDXJ. What I would look at if I'm looking at this in the short term, this little wick here today, where you were up in the morning and then closed down with the wick, I would not be surprised at all if for the next few days we cool off, see a pullback. It's very probably marginal, and stays above the 50-day moving average, especially if this gold rally is going to prove sustainable. And you're talking about a 5% maybe pullback. It could pull back more, but then I don't think so. I think but seeing a pullback in the miners that have rallied big over the next few days is to be expected. It'll be normal. But then I look at the monthly, on gold miners, and this is actually a very constructive chart, which I think is going to lead to higher highs again sometime in the next 18 months, which would take this up to somewhere in the ballpark of $80 for GDXJ. It could be 100+% move, call it within 2 years, because once it goes, look at this, it goes in months, like just several months can make these new highs. And right now, with the way that the tiny miners feel so bludgeoned, I think we've seen potentially these lows last October are still holding. And then we saw the weekly low 2 weeks ago that was here, and that wick held, and now we're back up. So I like to think longer term on the miners. And then if we look at certain plays like, silver, for example, I highlighted Golden Tag Resources the other day. We saw some buying, and there was about 300,000 shares in the Canadian exchange each day. Today, it declined quite a bit for the price, but it was like no volume. That's exactly what we want to see. I think Golden Tag is bottomed, and this thing has, tremendous upside. And if you look at the long term, I think, we are right on. You see that 10 cents is huge support, which look at what happened. It dipped below it 3 times and then held. That's very bullish. And I think the bottom is in on Golden Tag. Golden Tag eventually. So if we go back just to those highs that it's had before, you're talking about 60, 65 cents. So call it 5.5, 6x from here. But I think eventually in a silver bull market, Golden Tag will go into the dollars per share. But, just to play even back to resistance here at 19 cents, we're talking about an 80% return on paper. Golden Tag is a strong buy. They stole the La Paria asset from First Majestic in Mexico in this bear market. It is a tremendous asset. They've got a huge asset in San Diego. That was their flagship asset with billions of dollars of in situ silver and other metals. And this thing has been bludgeoned. So I would encourage you guys, if you like silver and you like the silver miners, Golden Tag is definitely one of my favorite juniors. And it's not that small. It does have a lot of shares outstanding, and a lot of liquidity will come into this play. So you can actually be a bit of a bigger investor and lop some of this up. And you're not going to worry about some of these other small ones. I mean, even Phenom is not very liquid. The volume is dried up, which is actually what we want to see. This is a 10-year chart on Phenom, who is drilling right now under the vanadium asset in Nevada, looking for the next big Carlin trend gold monster discovery that we've already expended 16 holes on, and have a lot of enthusiasm from Dave Mathewson, who's leading the charge on our gold exploration. I say our because I own a huge percentage of this company, FYI. I'm approaching 9 million shares and warrants, which is outrageous for somebody with my net worth. It's a big, big bet. And my cost average is closer to 40 cents Canadian than 30, just so you know. And part of the reason why we've come off is, not only are the gold miners and the smaller gold miners in this bear market that's terrible for the last 3 years, but also vanadium has been in a crap market since April. So that won't matter much if they hit a high grade feeder on the Carlin drilling, which is 2,000 feet deep and looking for a monster. We also have acquired two other what I think are potentially world-class Nevada exploration gold projects in Crescent Valley, which I did a YouTube video on with Paul Colley, the CEO, and Dave Mathewson. There's some marginal work going on there. And then we've got the Dobbin project. Actually, the Dobbin is what we got into details on with the backdrop of that story. Crescent Valley. That was in an older interview that we touched on, but the Dobbin actually is the one that was fairly recent. And we talk about how that was acquired very luckily from Phenom. So Phenom's now got deep Carlin under the vanadium gold prospect, Dobbin, Crescent Valley. We have a copper project, early stage in Arizona, and looking for one more gold or silver project, maybe copper related in the Nevada area. Okay. And, but I've been encouraging Paul Cowley to go shopping in this environment and get if there's anything that's very sexy, then we can build a world-class portfolio of gold prospects in Nevada. That's going to end up paying off big for us, because what will happen is that the vanadium asset, which is massive, highest grade, largest vanadium at surface asset in North America. It'll be the best story when vanadium finally comes back. We've got the 5% stake in MK Plus in Tokyo with an unbelievable battery technology. And we have other things that are cooking on the vanadium side. And so those companies will get spun out. You'll get a piece of both. And that will happen when the timing is right with market conditions. My hope is the first quarter. We were hoping it was going to happen in Q2 this year, but it just is not. We didn't have, that's why we've been accumulating these assets, so that the company as a standalone for the gold copper assets is going to be, fantastic. And, is going to attract a lot of capital, I believe, with Dave's background and with those assets. And the vanadium is already established. So that's what's the plan with Phenom. So those of you that are still looking for accumulating Phenom, I like this. This is the channel. Highs of 80 cents that we've seen in 21 and early 22. That is a 160% move from today's close at 30 cents. If we just go back up in the channel, okay? So you can buy stock under 35, double your money, take half of your risk off once we get to the next resistance, own the rest for free. And remember, all the way back in 2018, two times this stock went almost to $2. It was $1.80 and change. Once was in, I believe this was June, and then September, when it was just an option on the Carlin Vanadium project, which we now not only own 100%, all the payments have been done, and we are at a PEA stage, and we drilled another 60 some holes this last 12 months, increasing that asset, and it's still continuing to grow and is open in, I think, 3 directions. So that's why I'm so deep in this stock, because whether we get a big catalyst, and it's going to seem like it's out of the blue, but we've been working diligently to have some luck in Nevada. If we come back with this deep hole, if there's nothing there and it's just, we missed, then we missed. We're taking swings at the bat. And if we hit, and when we hit, because Dave, I fully trust in the ability of Dave as a gold geologist in Nevada, who's found multiple districts in this area and been a part of that and many, many discoveries and mines. His conviction runs deep. It's just a question of, how much more do you have to chase this and vector to find what you're looking for on the high grade systems. So we might not get it on this hole. I happen to think we might get lucky. We'll see what happens. It doesn't make or break the company. It actually would make the company if we hit. It won't break the company if we don't. So the backdrop is that vanadium asset is worth well over what this market capitalization in Phenom is. Minimally, we go back to the high ones, which is, we're talking about 6 times your money, just going back to the old highs. And then eventually this thing goes, much higher, just on the vanadium asset alone when that day comes in a bull market. But anyway, I'm going to wrap it up. I think there was one other thing I wanted to show you here, which is back on the Gold Investment Letter blog. If you go to the GIL Fall 2016 review, some of you who are newer here or just want some good content, I wrote this article and took a lot of time. First started out with gold, its role in the world and history, but one of the big ways that I lay out how to get rich in investing, which is how I got rich from my investments, okay, not from charging subscriptions fees and writing, newsletters. It's been from my investments. Obviously, that helps and that pays some bills. But, the way I've gotten ahead is by hitting on big winners. So I talk about stretching your horizon, which we've been forced to do. And a lot of people have given up. That's a good thing. We will go from this bear market to a bull market at some point. I don't know if it's going to be right now, if the gold miners have had enough on the downside and we start a new bull market afresh, but we're watching gold. Gold is the key in my mind to all commodities as well. And so gold being bullish is very good for the whole complex. But I talk about the time horizon and I talk about the fact that drawdowns are necessary. There are a lot of examples. I walk through Apple, Amazon, all these different situations that, look at what you had to endure if you wanted to get wealthy on a cumulative return. Microsoft as well. You had to get some jarring kicks in the butt, and kicks in the teeth and punches in the mouth to endure it. And if you were a buyer actually in those big drawdowns, you would have made incredible amounts of money. So this article, you all maybe I'm going to link it in this email. And if you're interested, just go ahead and read that on the GIL Fall 2016 review. I think it's very relevant for what we're suffering through right now in the gold and commodity miners. And I'm very bullish on so many companies, but just because there's so much value out there. So stick with it. Like even this Lithium Americas trade, watch what happens. Let's see what happens. I think I'll stick it, and everybody's doubting. Not probably that many people even took me up on the trade, except for the premium and elites that know this track record is real. But and anybody who wants to comment on that in the video to let people that are free e-letter people know so that they can make some money as well. I'm not fabricating this at all. So we'll see what happens there. These things like, Golden Tag, Phenom, fantastic opportunities for long-term investors. And I hope everybody has a great night.